Hello everyone. I'm Kritika S, Assistant Professor of Department of Commerce at Dr. SNS Rajalakshmi College of Arts and Science, Coimbatore. Today, I'm here to discuss about the cash budgeting. Let's move into the PPT. Before moving into PPT, I want you all to know about what is cash budget in a gesture manner. Cash budgets are an important aspect of financial planning for any organization. While managing the bottom line is critical, cash will always be king when it comes to operating a healthy business. Cash budgets are one tool that experts and finance department use for planning and managing cash surplus and deficits, providing useful insights into how a business can manage its revenue and expenses. What is actually a cash budget? It's an estimation of cash inflows and outflows over a specific period of time. Cash budgets are useful in that they can be produced for long time and short term goals, sometimes for as little as 1 week. Often, cash budget is made quarterly and reviewed weekly or monthly depending on how critical cash is to the organization operations. The primary objective of cash budget is to focus future cash balance in order to identify potential deficit surplus. Based on the forecasted balance, financial professionals work to create plans that manage those situations effectively. It works by taking an itemized list of all of the sources and uses of cash in a given period of time and then rolling it using the current cash balance, creating a plan that addresses how to manage the net cash position of the period in a review. Cash budget is a schedule to record cash inflows and outflows over a period of time with a view to locating the timing and magnitude of cash surplus and shortage. Why is cash budget is important? It allows the company to predict possible cash shortages and take corrective actions before a crisis occurs. Allows companies to see if large sums of excess cash or lying idle could be put to better use. Assist with the identification of when commitments are due. Cash budgets are often important for several reasons. For most organizations, cash is a critical component to daily operations. There are business models that are not cash intensive, but even they benefit from diligent cash budgeting practices. One reason cash budgets are so important is that they highlight and provide useful insights to potential cash deficit. This helps business leaders to plan accordingly and adjust costs so that cash balance do not run too low. In the same vein, cash projection can be used to identify periods of time where excess cash balance are generated, thereby allowing financial planners to make effective use of the capital. Another useful byproduct of cash budget is that they help to regulate expenses by identifying the time period where expenses run higher than the offers. By helping to identify these time periods, financial analysts can review and explore ways to reduce expenses overall or create plans to spread the burden of the expenses out over a longer period of time, reducing the cash demand. Because cash budgets are designed using receipts for income and expenses, it creates a useful map of sources and uses of cash. These sources and uses can be used to create efficiency in process. For example, if revenue is higher for the period but cash collections are low, then it allows the business leaders to address collection cycle and manage receivables better. Finally, a result of creating cash budget is that it reinforces the principle of adhering to a financial plan. By highlighting the sources and uses of cash and identifying potential times where cash balance might run low, it helps to steer the organization to adhere to more physically responsible practices. In some cases, it uses accounting software to identify sources and its uses from a bank account. However, it is possible that poor record keeping can have an impact on the availability of the information. So, there are three methods that are used in cash budgeting: receipt and payment method, adjusted profit and loss method, balance sheet method. These methods can be used for the estimation of cash budgeting. I hope you got a better understanding on cash budgeting. Thank you.